Today is Tuesday, January 16th, so we can see that at 8:30 a.m. this morning, when the news embargo is lifted, there was one red file news driver for the US dollar. If we look at a 1 hour chart, last night, being Monday night, we broke this intermediate term low here. We broke this intermediate term low here. That was at 7 p.m. New York time. Now this morning at 2 a.m. we formed this intermediate term high on a 1 hour time frame. And then we broke it at 7 a.m. So this created a change in market structure. Now we have bullish market structure since 7 a.m. And I did not see this until after I took my trade this morning. So we'll get into that. Right at news embargo lift, 8:30 a.m. I sold short here. I sold short right at the bottom of this fair value gap on the 5-minute. I have my stop loss just above this order block. 1 or 2 ticks above this order block here. And so the reason I liked this trade was because, for one, I'm bearish on the NASDAQ, and I didn't see this change in underlying market structure. So if we go to a 1 hour time frame here, we can see this sell side imbalance formed yesterday after New York lunch. So I have that projected out to here. And then if we go down to a 15-minute time frame, this smaller box is this 15-minute sell side imbalance, which was almost completely balanced by this swing high, but it wasn't. So I projected that out to here. Now the reason I like this was because price ran up into this 1 hour sell side imbalance. I'm going to make it darker here. And rejected hard off of it. And then when it started to retrace, it made this swing low here, which created relative equal lows here. And there's a buy side imbalance just below those here. All right, I'm going to pause the video real quick and say this. I didn't mention it, but this red line here was my entry. And this higher red line here was my stop loss set just above this order block. Now, if we look at a larger scale range, we can see that I actually sold short in a discount, which isn't ideal for obvious reasons. Hopefully obvious reasons. And so this trade didn't pan out, obviously. You can see that. And I took note of this bad trade and I put it in my journal. And so I have 4 reasons as to why it didn't pan out. So for one, the sell side imbalance that I sold in, this one here, had 2 relative equal highs directly above it. So that's this here and this here. And if we go to a 15-minute chart, that's this high here and this high here. So bad trade because there's relative equal highs directly above this. So price is going to want to gravitate towards this. Reason 2 was the relative equal highs had an hourly, 15-minute, and 5-minute sell side imbalance directly above them. So that's these fair value gaps right here. Another possible draw on liquidity in the opposite direction that I want to go. Reason 3, I sold in the discount range. So below equilibrium from this range. I sold right here. And what makes this all especially worse is that these relative equal highs and fair value gaps are directly above equilibrium. So these stops resting above these highs are in the premium, and these fair value gaps are in the premium, and we're trading a discount right now. And reason 4 was there was an hourly market structure shift to the upside, which was this swing high here. If I go to an hourly chart, you can see that this swing high balanced to this imbalance, so that makes it an intermediate term high. And price went above that at 7:05 this morning, creating a bullish shift in market structure. So this trade just overall sucked, but it's a part of learning.